Hello everyone, welcome to IGCSE Accounting. In this video, we want to talk more about the bank reconciliation statement. First of all, we look at the definition of the bank reconciliation statement, which is a statement explaining the differences between the cash book bank balance and the balance on the bank statement. And sometimes, why we need to do this checking? The delays might caused by scenario number one, the time taken to post a check to a payee. In the real life scenario, there are sometimes that we prepare the check, but when the time that we deposit the check, it can be a period of time. So in the company, we already issue the check and we get someone, sometimes it's the runner, to deposit the check. There might be a delay. But so in our cash book, we already recorded there is a check issue, but in the bank statement, not even deposit yet. Scenario number two, the time taken for a payee to deposit the check into their bank account. Same thing that example that I explained just now. And then lastly, the time taken for a check or other deposit to be cleared by the bank once deposited. That means even though the runner already deposited the check, but the bank will take a few days in order to have that particular money into the payee account. So in here also mentioned that the banks typically take a few days before the money placed into the payee account. So there is some delay and discrepancies that might be happening in this process. And then that's caused the problem. So there are another term called unpresented check. A check that which has been issued, but the payment has not yet appeared on the bank statement. The payment will have been credited to the business cash book when the check is issued. So this is one of the scenario. The other one we are looking at maybe is uncredited deposit, an amount that which has been received, but the receipt has not yet appeared on the bank statement. The receipt will have been debited to the business cash book when the payment was received. Okay, for example, in this case means, let's say my customer issued a check and they already deposit into the check deposit machine, and they even share me the proof that from the machine saying that I already deposit the check. This is my proof. Show the company the proof. So what me will do as a company accounting executive or maybe the bookkeeper, I will record in the cash book bank column saying that we have received money. However, upon the time that I got the bank statement, this particular transaction is not shown because after deposit, there are processes that maybe the bank staff need to open the check deposit machine to get out the check, and then after that, the bank employee, the staff, need to check the check, double check the check whether it's correct written, and they will need to approve some approval process, etc. It takes few days, and the bank statement, this amount is not appear, it's not there. So that is the reason. So there are some scenarios that we might need to take note. Okay, that's all for this video. We will talk more about how to do the bank reconciliation statement in the next video. See you then.